Hey, this is Matt from InvestiQuant. Today is Wednesday, September 16th, 2020. And today we have the FOMC announcement. It will be out at 2 p.m. Eastern Time, followed up by Fed speaker at 2:30 p.m. Eastern Time this afternoon. So what I want to do this morning is take a look at what has happened historically on the FOMC announcement day, and we'll look at it when gapping up as the market has pushed higher in the overnight session. So let me set this up and discover. We'll look at all four instruments. We're going to use an intraday open setup, so that means it is getting long at 9:30 a.m. Eastern Time. It is exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. For the opening filters, I'm simply going to say that the open is above the prior day close. We also have opening areas that you may want to dig into because we very well could be opening above the prior day high. I'm not sure right now. We are trading higher and we're trading in that general area. So I'm just going to keep it a little bit more generic and say simply gapping up, but you can dig into that later if you'd like. In indicators, I'm going to simply say that we are above a 200-day moving average. I'm not going to put anything else in there because I want to keep as many samples as possible. If you want to dig in on your own, you may want to use a short-term moving average as well. And then lastly, I'm going to go into the market events section. In the market events, day of events here, I'm going to find the FOMC announcement, which is right here, hit equals next to that, and then click view results. And here we go. So these are the results of going long at the open of regular trading hours, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when opening higher on the FOMC announcement day, went above 200-day moving average. Historically, the S&P has 66 samples dating back to 2003, the NASDAQ 76, the YM 62, the Russell 61. And looking at win rates here, looks like the S&P, 36% of these have ended up with a green candlestick on this day. The NASDAQ has been pretty 50-50, so 51% there. The Dow, 45%, and the Russell, a little bit weaker at 43%. So none of these are strong. A couple are pretty mild, with the S&P and the Russell being the weakest of the group. Looking at average win, average loss, the average win on the S&P is a little bit bigger than the average loss. That is not the case for the NASDAQ, so the average loss is bigger there. The average loss is bigger for the Dow, and the average loss is bigger for the Russell. So S&P is not the same as the others. And let's go ahead and take a look at the results distribution. I've got the S&P selected here. So this is the results of the S&P. Looking at this histogram here, the way it's set up, the taller the bar, the more frequently that result has happened. So you've got the trades on the vertical axis, trade count, and then on the horizontal axis, you've got the amount the trade has made historically, with 0 being right here, dead center. The bigger the move to the downside would be on the left. The bigger moves on the upside would be on the right. Green are positive days, red are negative days. So looking at this, looks like we've got the fat part of the distribution here highlighted in blue, which is majority of these are losing trades, which we saw a weak win rate there. But, you know, I'm noticing here the outlier trades are pretty even on either side. So historically, the big moves, when they happen on this day, seem to happen pretty evenly. In fact, let's just do a quick count of, well, we've got plus 18 points here. We've got 2 positive there, and more than 20, we've got 5. So we've got 7 total samples here, more than 18 points to the upside. Let's do the same thing on the downside. We've got 1 for 18, 1 for 20, and 5 for more than 20 points on the downside. So those are exactly the same historically for the big moves, plus or minus 18 points, exactly the same samples. So historically, the odds of the move, if it's going to be a larger sized move, has been pretty evenly distributed. But if you look at the one standard deviation area, you can see there are a lot more occurrences of losing days here in red. So hopefully you found that helpful. Good luck today, and we'll see you next time.